welcome to the morning market briefing. It's Friday, January 6th.
Never forget.
United January 6th. So hope you're doing well out there. We're going to open up today with some employment data that I can see Ben doing some math. I feel like we got some data in terms of data points in terms of the employment rate, participation rate from the non-farm payrolls. Tom, what did the numbers come in at, and do they make sense?
No. Well, yes, the numbers came in, but no, they don't really make sense. So the estimate was for 203,000 new jobs. We came in at 223,000 new jobs. And then last month we came in at 263 and actually revised that down to 256. So net, we only picked up about 15,000 unexpected jobs. So hotter than expected, but not really by much given the revision down. The number that doesn't make sense, though, seems to be that somehow the unemployment rate went down by 0.2%. So it dropped from 0.37 to 0.35. And then the labor participation rate actually went up to 62.3%. So somehow 15,000 jobs seem to make a very large swing, both in the total unemployment rate, while simultaneously more people entered the
it makes
participation
no sense.
rate. Yeah, so the participation rate, there's no way it can go up that high and then also have it come down on a net of roughly 15,000 jobs.
Because they're essentially saying that 15,000 people is 0.2% of more workers than we had before, and that makes I don't
unless everyone's unemployed, I guess, but that can't be true because unemployment rate went down too.
I think what we're seeing is the difference between the household survey and the establishment survey. So the number of new jobs, that 223,000 number, that's the establishment survey. That's people going to businesses and saying, how many workers did you hire or fire over the last month? And that was 223,000. A modest increase, but should not have resulted in a decrease in the unemployment rate. The household surveys, they go around to people, call them up, say, do you have a job? And more and more people
who's asking,
and more and more people saying they have a job. 164,966,000, and that was the one where the participation rate increased and the unemployment rate fell. So potentially fewer people working two jobs, which is really good, because if you're working two jobs, you get double counted in the establishment survey, but only get counted once in the household survey. If you just work one job, you get counted one for one. So if you're no longer working two jobs, you're only working one job, establishment survey doesn't go up by as much as the household survey.
They say if you have two jobs, you don't have a job.
Bottom line is, I think this is a beautiful number. I think that it shows the economy continues to grow. The unemployment rate needs to go up a little bit. I don't think the Fed will like that, but they will like the participation rate going up, and they will love the fact that average hourly earnings only increased 0.3% on a month.
That's the most meaningful number to me.
Down from 0.6%, and on a year over year, you're only up 4.6 compared to 5.1% last month. So
they also revised that 0.6 down to 0.4, which is even stronger.
So and on top of that, you're seeing the gains in leisure, health, and construction. So these are places where you would expect the gains. You're not seeing it in the finance, the technology sectors. So you may have some mixed impacts on that number. But overall, I think this is a great number. This is a Goldilocks number, and I think the market should go up on it.
Yeah, Tom, what are you seeing in market movement or in rate world?
In rate world, we're seeing kind of a mixed bag. If you can believe it, the May, June, July, and December treasuries are actually up, and everything else is down.
May, June, July up.
So for some reason, just sort of the second half of next year or this year now is seeing some strength, whereas everything else is down, but not by much. I mean, we started the day roughly around a 370 or so on the 10-year, and we're right now at a 372. So it's not major changes, but a little bit of strength in the short term, and then everything else is just a little bit kind of blasé.
Good stuff. We did hear from Bullard yesterday, noting that GDP growth improved in the second half of 22. I don't know how noteworthy that is, but commenting specifically that labor market performance remains strong. Certainly got data today that underscores that. Tom, any major takeaways from old Jimmy?
I think he was relatively dovish relative to history. I think he wouldn't specifically nail down whether he thought we should do a single rate hike or two in the next meeting, but basically, I think what he's saying and showing, he had a chart that he put up that basically showed that we're very close to what he would consider the sufficiently restrictive zone based on something called the Taylor rule, which is a mathematical calculation of roughly where the federal funds rate should be in relation to inflation. And so given that they've been very aggressive, and inflation has come down, those 2 points are converging in his mind. And so he was relatively dovish, but I would expect to see continued rate hikes. But I think that the pace is definitely going to slow significantly. And I wouldn't be expecting a cut in 2023 based on his statements.
Interesting. We got Eurozone CPI came in a little bit lower than expected, but the core still running real hot and even accelerating. Headline came in at 9.2, down from 10.1. The expectation was for 9.5, but the core at 5.2, up from 5. I mean, just obviously a huge gap there between the core and the headline number, but not as much cooling as maybe people hoped for on the core side.
Yeah, I think that you do have some relatively entrenched inflation there in Europe. I think that their inflation came a little bit later than the US's did. So I think we might see these elevated core readings for a few more months than in the US. But natural gas prices are about to be down 20% this week. So I think that that's going to be a huge bonus for European inflation. I think that's going to lend to some confidence. And I think that ultimately I was talking to an intern at the office yesterday, and I made the point that if you are looking for higher inflation readings, you are now the cherry picker. You're trying to cherry pick to fit your narrative because the overall panoply of data is suggesting that inflation is coming down. We even saw that with the employment situation this morning. And Jim Bullard, I thought he laid it out very clearly in that presentation that he said yesterday. He said, look, inflation expectations are back to where they were at the beginning of 2021. And 2023 probably going to be a disinflationary year. He said that the policy rate's not yet restrictive, but it's very close. And it is difficult if you're being reasonable to downplay that. Now, we know the Fed's never right about stuff, but as we stand right now, that's probably the best. I mean, I'm going to use a slide like that in the macro presentation in a couple of weeks. And I might even just say, here's what Bullard thinks. Yeah. Because it's a relatively fair assessment of where it is. And the fair assessment in Europe is that inflation is coming down. Believe it or not, inflation is coming down.
It's transitory,
Yeah. It was one of the more rational and concise explanations of how they're thinking that we've seen, because a lot of it's been so scattershot. I mean, Kashkari talked earlier this week and he was just a mess and he stinks, but Bullard surprisingly came in with some very level-headed analysis. So
it was level-headed, and it was I felt like it was reflective of where we are, and not necessarily sometimes with Bullard especially, there seems to be such an undeniable desire to inject his own opinion of what should be done rather than just saying here's where we are. And this was a little more of the latter, just kind of here's what it looks like.
Yep. Got a question in the chat from Akash. Is there much expectation for China reopening to push oil and liquid natural gas up and impact inflation, or will it need to move the needle? Not really move the needle. Sorry.
That's a great point. I would say that's probably would result in the upside risk to inflation as we go through the rest of this year. There was a hedge fund manager this morning by the name of Pierre Anderand, and he said that there's a chance that oil goes to $140 a barrel this year on the heels of Asia reopening. So I'm not sure if that's what the question was referring to, but I do think there's a risk of that. I would say though that unbelievably to me, the U.S. government is on the right side of this trade right now. They have a bid in there at $70 a barrel in 2024 for 2024 oil. So that should support oil on the downside. And also, if the oil goes up, that bid goes away because that essentially put goes further and further out of the money. So, and then you have OPEC on top of that, which really wants $100 a barrel oil. So they might cut now, again, supporting oil, but it goes above $100 a barrel, and maybe some of the other OPEC countries put some pressure on the Saudis to start to increase production because they're leaving money on the table essentially. So I think that you're not going to have the same degree of supply shocks or even demand shocks. It's just harder to move demand as quickly as you can move supply in some instances. I mean, just look at a pipeline going down, boom, that's a instant supply shock.
Yeah.
It's tougher to have a demand shock of that magnitude other than just shutting down the world economy like was in 2020.
Never forget. Samsung earnings down 69%. Tough times.
Yeah, Samsung, they really got smashed on.
Sorry, guys.
Samsung really got smashed on memory pricing, memory chip pricing. Their customers really drew down on inventories, and Samsung has been adamant that they're not going to cut production or capex, which is anomalous in the industry right now. We heard Micron at the end of last month saying that they're cutting production quite significantly, but Samsung is not doing that. So Samsung was also hurt by fewer smartphone shipments as a result of the weaker macro. But interestingly, Samsung shares were actually up today, and they're up about 7% for the week. And the reason is basically this profit number is so bad that analysts seem to think that Samsung is going to see the writing on the wall and say, we have to cut production. It basically serves as a wake-up call. I'm not sure if Samsung is going to do that, but that's the trade right now. And it is worth noting that after Micron came out with that very weak report at the end of December, it has not made a new low since September. That's really good news if you're a chip bull, because when stocks start going up on bad news, that is the potential sign that a bottom is in.
Yeah.
And so for Micron, at least specifically in the near term, that trade is bearing out. It's tenuous, but Samsung also supports that thesis today.
As we kind of look ahead to next week, how would you summarize first trading week of the year? You guys, what were the big themes and anything catching your eye next week?
I think the energy piece is the big thing for me. You had that little rally at the end of the year, and then it just got smashed this last week. Natural gas down 20%, oil down 10%, despite a pipeline going out, the Colonial Pipeline. And I think that that's going to have to be something to watch. And as a result, inflation expectations have been coming down too. And despite all the hawkish talk, Kashkari, Esther George, even kind of sort of Jim Bullard, you're seeing rates go down versus where they were last week.
Yeah, I would say that the big thing is we've seen surprisingly a really strong start to fixed income. We're seeing some really good price gains there. And some resilience too. And we've had a lot of information come out this week, Fed minutes, jobs reports.
Yeah.
The numbers have been kind of all over the map, and we've seen some relative stability, which is the opposite of what we saw to start the year last year, which we saw just massive selling of bonds that really continued throughout the year.
I think you've seen some re-hedging from companies. You've seen a lot of large S&P 500 stocks, for instance, start to get down weighted now that people don't have to record a tax gain. Companies like United Health has been down, boy, seems like 3% every day this year. Microsoft, Apple's taking it on the chin. Tesla is down another 7% this morning to about $100 a share. So you've seen a lot of intra-market volatility. You've seen a reasonable amount of broad market volatility. I would expect that to start to soothe out a little bit and become more idiosyncratic and actually news-based as we get into earnings season, which will begin at the end of next week.
Good deal. Also get a little CPI talk next week. Fun times.
Can't wait.
Yeah. And the expectation there is for it to come down further to about.
Yeah, I just feel like the way today's gone with the jobs report and everything, I feel like it's just going to be way too high because we've been talking about how we have to really pick and choose where we would see inflation. But this just has us regretting our words written all over it.
Oh yeah.
Yeah, I Tom and I were talking about that on the way over. What's this jobs number going to do? Well, based on the ADP number, it's going to come in at 300,000, but knowing how our expectations tend to be exactly wrong on this high frequency economic data, it's probably gonna be 110.
Yeah.
Well, 223.
So
So
you guys will be down at a conference Monday through Wednesday.
yep.
Um,
We'll see a lot of small kind of retail companies, consumer facing companies. We should get a really good sense of where the consumer is. We're gonna try to divide and conquer that. We're also taking Jason Sieb, our analyst, down there. And we should be able to get a pretty good read on various companies. And we've had some good investment ideas come from there in the past.
yeah, definitely. And then national championship game Monday night. Enjoy the watch party at that conference. We've done that a couple times. There's usually free but awful beer. So
Yeah, they rolled out the Salt Life beer for the Joe Burrow National Championship. And it was really terrible.
like, if you know anything about us, if we buy beer when there's free beer available, the free beer is pretty bad.
Yeah.
And we went to the little convenience store inside the hotel and just had to buy our own beer because that beer was so awful.
It
So
was horrendous.
Who wins the game?
Ooh, one of the two teams involved, I would guess.
that's a good call.
Not Ohio State or Michigan, that's for sure.
Georgia by 11.
Ooh,
Ben,
I say Georgia. I'm not gonna give a spread though, but
I'm gonna go contrarian here. Say TCU in overtime.
ooh,
Wow.
I just hope both teams have fun.
I mean, like 40% of their games have gone to overtime. So,
Yeah.
I mean, the odds are pretty good.
Yeah, I just hope everybody has fun and no one gets hurt. But at least one team probably will not have fun. That's just how it goes. But we'll wrap it up there. We'll be back Monday. Hope you guys have a great weekend. Talk to you soon.